Hey folks, Dan Frio here with your real estate update for December 18th, 2023. I hope you guys are all ready for Christmas because I am not. But today what we're going to talk about is, if you're new to my channel, what we usually talk about is interest rates, the economic data that's basically coming out that's will be affecting the rates, and then just some other stuff. We talk about mortgage programs, housing inventory, a bunch of other things. What I want to do today is because there's really no data out, I want to give you a precursor to my 2024 forecast. I'll put it that way. And I usually don't like to really try to emphasize what's going on with home prices because I don't know. Nobody really knows what your neighborhood's doing. We might know what your city's doing, what your state's doing, what your part of the country's doing. We don't really know what your neighborhood's doing. So what I would like to do is give you guys basically an economics class to figure out all this for you to see what the dynamics of housing is going to be in 2024. You might be pleasantly surprised. So let's get over to it. The first thing, like I said, is we usually go through the economic data. We don't have anything coming out today. You can see Monday, there's nothing. So without further ado, let's get over to the dynamics of housing in 2024. So the first thing we want to talk about is interest rates. Where are interest rates going to be? That's the number one question that I get asked. Well, great question. This is what we watch, and I watch this along with a slew of other information. What this is I want to see what the Federal Reserve, what are they doing? Are they increasing rates? Are they decreasing rates? Where are they at with things? So for that, I go to the CME, this is Chicago Mercantile Exchange, and they have actually a FedWatch tool. Currently, the Federal Reserve has the federal funds rate, that's the rate that they control, at 5.25 to 5.5. Okay, so what's going to happen in 2024? That's the first piece of this puzzle. So to do that, we want to go down through here, and this is exactly what this does. What's the likelihood the Federal Reserve will change the federal funds target rate at the next meeting or the next meetings? So let's get over to that. Right now, we are in 2023, and you can see that here. Federal funds rate currently is 5.25 to 5.5. You can see that right here, and it was unanimous. Everybody basically put their dot right here. So what this is the dot plot. You guys might start hearing more and more about the dot plot. This is where the Federal Reserve comes in. They do it 4 times a year, and when they meet, all the people that sit on the Federal Reserve, they put a dot on where they want interest rates to be or where they expect interest rates to be. Now, a lot of people blame me. They're like, Dan, you don't know what's going on with interest rates. Well, even people that sit on the Fed have different opinions. Let's get over to it. Right here, we're in 2023. Federal funds rate ended the year at 5.25 to 5.5. So that's that. So now, what's next year going to bring in 2024? Well, that's interesting. These are where the Federal Reserve members are putting their dots. Hardly any of them are agreeing with things. The most agree upon number is right through here. And what is this number? Is 4.75, 4.5 to 4.75. So if we're at 5.25 to 5.5 right now, that means rates are going to drop 0.75%. Okay, so now other people think that's going to go here, and other people think it's going to go here. What's going to happen? We really don't know. But all this basically is saying rates will be coming down, and the average economist right now is expecting the interest rate to drop by the Fed at least 1 full percent in 2024. So that's that part of it. But we're going to monitor this on a daily basis to inform you guys what exactly is going on with rates. But the next thing is you want to look at is how much inventory is. So in economics, we look at supply and demand. Okay, so the supply of homes, here's the inventory that we see. And a lot of people say, no, it's a farce. There isn't a shortage of homes. Well, here's the chart. And this is, a very thorough investigation of this. So here's where the chart of new homes or in the inventory is over the years. We're basically at historic lows, or at least in the last 20 some years. Okay, so the supply isn't there. Supply, is it going to come from foreclosures? Well, let's look at the foreclosure data. Here's where foreclosures are. People 30 days late and more, right through here. Basically the same as where we were last year. And 30 days to 60 days, well, a little bit uptick in 2023, so a little bit more people in that stage than they were in 2022. Then you start reaching a little bit further on, as they get further and further delinquent all the way to foreclosures. You see the 60-day plus is average as it was last year. The 90 to 120-day, same thing. Serious delinquencies, actually last year in 2022, 1.2%. 0.9% in 2023. Let me get my head out of the way so you guys can understand what I'm talking about here. Then you go all the way to foreclosures. Foreclosures are basically the same as they were last year at the most historically low numbers we've ever seen, 0.3%. The reason being is people have equity in their houses. If you bought a house in the last 2-3 years, you have equity. If you bought a house 5-10 years ago, you have equity. The only time you go into foreclosure if you don't have any equity in your house, meaning you don't have, the house is worth more than you owe on it. Most people should be in that position because of the way houses have appreciated over the last several years. So we're not going to get that from foreclosures. Are we going to get that from people selling their houses? Well, it depends on what mortgage rates do. 80% of people that own a house have a rate at 5% or less. So unless rates really get to say 5.5%, where there's saying, okay, I'll eat the 5.5%. I have a 5% mortgage, so there's not that big a difference. So until the rates get to basically 5.5% or lower, you're not going to see a lot of existing homes hitting the market. So my summarization here is you're probably going to take it. Mortgage rates are going to be probably down a decent amount. They could go down to about at least 1 full percent. My prediction, you're going to find out next week on what my prediction is there. But then what we start seeing is the supply of homes. Still not there. We don't have the building permits to do it. We don't have the building inventory to do it. We don't have existing homes going for sale to do that. And we don't have foreclosures going to do that. So there's not going to be a huge oversupply in the market. So housing's going to be flat again. We're not going to have a huge robust ramp up in home values, skyrocketing. People just can't afford them anymore. But if you're trying to get into this market, you might have sat on the sidelines since 2021 because people were saying there's going to be a crash. It's going to be worse than 2008, but they really didn't explain to you the dynamics behind it. They're just saying, well, house prices went up, so the only way people can afford it is to, house prices to crash. I saw somebody the other day saying they have to crash 50 to 60%. That's ludicrous. Okay, so you're not going to see a housing crash, folks. You didn't see one in 2021. You didn't see one in 2022. You didn't even see one in 2023 when rates hit 8%. So what would cause a crash? The only thing that would cause a crash is a huge oversupply of homes in the market. So that's my feelings, and that's where I think housing is going to go in 2024. So because there's no economic data out today, let's see what's going on with interest rates. Basically, it's completely flat. So, that just changed from 9 to 13. So here's what you're seeing right here. What I follow and what you guys should follow, especially if you're a mortgage advisor, I subscribe to MBS Live. So if you're a mortgage advisor, I highly suggest you do that. If you're a consumer or realtor or whatever, just watch my videos every morning, 5, 6, 7 minutes, and you'll get all the news that you need. So what we follow on this channel is we normally in the past used to follow the 10-year Treasury. Why? Well, if you looked at the 10-year Treasury yield, and that's what you're seeing right up through here, you can usually add 1.5% to that. So in this case, that's 3.9 plus 1.5 is 4.4. That's usually where mortgage rates would be. It'd be 1.5% or 150 basis points added to the 10-year Treasury. There's been a huge disconnect with that in 2023. So now what we truly follow is the mortgage bond. Why wouldn't you? Well, this is what I've been following for years, just so you know. So this is right here, what you're looking at is the MBS. It's a mortgage-backed security. It's a bond that trades on Wall Street. That's yield is the biggest component of your mortgage rate. So why would you watch the 10-year Treasury when you can actually watch the mortgage bonds, what they're doing? So what you want to do is you want to follow this number right here. This is the price of the bond. Okay, all you need to know with a bond, it doesn't matter if it's a mortgage bond, a corporate bond, a Treasury bond from the government. If the price goes down, what you're seeing right here, the price goes down, rates are going up. Okay, what we want to see is the price going up. And if you look at this last week, prices went from here all the way up to there. It was the biggest decline in mortgage rates over centuries and centuries. I think the biggest in history. But what you're seeing right now is a little bit of a reprieve. This week should be basically stagnant. You might have seeing rates uptick just a little bit because there's not a lot of traders on Wall Street, but that's what you want to watch. You want to watch the MBS markets. So we're seeing, I'm expecting rates this week just to be completely flatlined. So minus 11 is probably not going to do anything at all. So that's what I'm expecting for today. But if you're out there and you're like, Dan, what do you do? I know you do this video every day, but how can you help people? What do you actually do? Well, I'm a mortgage advisor. I'm licensed in all 50 states as well as Puerto Rico. I've been doing this for over 30 years. I'd love to help you navigate this market. If you're out there and you've locked in your rate and rates have dropped, substantially like we saw last week, are you stuck? Well, you might be stuck. Okay, if you're closing in less than 2-3 weeks, you're probably stuck. But if you have a little bit longer duration of time out there, please reach out to us because I might be able to find you a better rate and lower fees, or maybe all the above, lower rate and lower fees. Last week, there was 2 borrowers that I worked with. I saved them both over $5,000 in closing costs, and on average about 0.75 to the rate. Yes, 0.75% lower in rate, and on average $5,000 to $6,000 in costs. How do you find out what we can do for you? Well, there's a loan estimate tab right up there. What is it actually? Well, when you get pre-qualified with a bank, they're going to send you a closing package. It's probably 60 or 70 pages long. Part of that, it's 3 pages. It's going to say your loan estimate. We want to see that. We want to see the entire loan estimate because it's going to be the price you're paying for the house, the loan amount you're getting, what kind of loan it is, what the interest rate is, and what the fees are. We need to know the fees. Don't get wowed over the rate only, because I had last week one gentleman or one person was actually paying over $30,000 to buy down the rate. That's ludicrous in today's market. So that's number one. Boy, if you're out there and you're like, Dan, can you help me? Do I make enough money? Is my credit score good enough? Do I have enough down payment? Well, don't disqualify yourself. Reach out to us. So we'd love to help you. How do you do that? Well, you can hit the Apply Now button right up there, or you can scroll down to the bottom of our website. The website's therateupdate.com. You're going to find a whole bunch of things. Tabs across the top give you a whole bunch of information there. We're going to have blogs explaining different mortgage programs, mortgage calculators. And when you get to the bottom, you're going to see our 800 number and my email address. And it is right there, 844-775-5626. Or you can email me directly. And yes, it's me, and I will be answering you. My email is dan@therateupdate.com. Thanks so much for watching, guys. Don't tell anybody about my sneak peeks for 2024 because I have a major video coming out next week to break this all down for you, and I hope you're pleasantly surprised. So God bless, guys. Thanks so much for watching. Hope you share this video with other people that you know, your family, friends, relatives that might be looking to buy a house in 2024, because we'd love to help them. Take care, folks. See you tomorrow. Bye-bye.